Hi and welcome to the Market Alert for Tuesday the 14th of March 2023. So equities were mixed and yields dropped heavily in the fallout from recent bank failures. This is obviously yesterday, following on from SVB being bailed out and Signature Bank also being closed down and depositors' money being guaranteed by the Fed. Yields and financials in free fall amid haven flows on bank failures fallout. And Biden insists the banking system is safe. Well, it will be now because they're just making sure that all of the depositors' money is covered by the Fed. But they've still got problems, and I'll show you that in just a second. Small banks are crashing. It would be the savings and loans 2.0, but we regret to inform you there are no savings. And that's the problem because to do with the banks having to hold certain number of bonds, and of course they were cheap bonds and interest rates have been rising, and that's caused the problem. And economic news for today doesn't go to help because at 12:30 we've got the CPI today. It was previous of 6.4 and 6.0. Now this is a bit of a problem and a dilemma for the markets, and I've just watched a video clip which can put it more eloquently than I can. So let me just switch to it here. This is a video here. Bloodbath has just begun. Dr. Doom Rubini says we're solely in the first innings of a major debt. And coming back to today's CPI numbers, and also last week Powell was saying that he needed to go to 50 basis points in the next meeting, or that was the speculation. They would have to raise 50 basis points because all of the economic data, as we've seen in the Market Alert, have been pointing towards more inflationary pressures. But of course he's trapped now, so let's listen to this.
The FOMC meeting in late March, and here is the dilemma. On one side, inflation is still too high, and the real economy, a very tight labor market, needs the Fed to raise rates not only to 5.75, but all the way to 6%. But interest rates this high in a world in which we're in a debt trap imply the risk of a financial meltdown, a debt crisis. It's going to make the recession more severe, and a more severe recession is going to lead to more defaults. So there is a doom loop between an economic and a financial crash. So the Fed is damned if you do and damned if you don't. If you fight inflation, you cause an economic and financial crash. If you need to save the financial system, you don't raise the rates, then you're going to have a de-anchoring of inflation expectation, like the 70s.
Exactly. And I mean, we're speaking ahead of CPI. What happens if the numbers, come out showing they're still not winning the fight?
Well, regardless of what the CPI would show, could be a little bit stronger or weaker. I think that the economic data of the last few weeks and months, with very tight labor market, with core inflation being still very high, would suggest that the Fed should do at least 50 basis points at the next FOMC meeting. That was what Powell signaled just when he did this congressional testimony last week. Now this financial nightmare is occurring, and not only they're not going to do 50, not only they're not going to do 25, it's highly likely they're going to totally pause. So to have financial stability, you're going to create more inflation. Or if you want to fight inflation, you're going to cause financial instability.
So what Rabuni says there is absolutely spot on, and I couldn't have put it better myself. He did it far more eloquently as well, in a much more detail. Okay, let's move on. We've got a claimant count from the UK at 7 a.m, but the main focus today is going to be obviously still the small banks and also the inflation. So the market's likely to go quiet up to the run of 12:30 before this date is released, and then of course it could be all sorts of carnage after that if it came out at 7%, and Powell's going to be really painted into a corner, but we'll have to wait and see. So that's at 12:30. Okay, let's move on and have a look at the market. So we'll kick off with the Dow, see what it did during yesterday, and work our way through as normal. So in the Dow, we see the market taking out the 200 MA on Friday. Yesterday, we saw the market continue lower. Overnight, the market's finding support at the moment. No surprise there. If we hadn't got the CPI numbers today, I would hazard a guess of the market actually coming all the way back. but that's going to be looming in the background. So yesterday we see the markets sell off, but we also see one hell of a recovery as well during yesterday after the Fed came out and said they were going to support the market. So from the overnight in this move, let's just have a look there. We were down 832, and then we see the market recover from here off that low back to the high there of 717. So some big swings there during yesterday for the DAX. So 800 plus down, 700 plus up, and then the market managing to stabilize overnight, sitting at the close there. In the German DAX, big move to the downside, one of the biggest I've seen for a long time. We'll look at the points move in a moment. We are sitting at, there we go, a 62% retracement in this market, coming off here. So from there to there, we're sitting at 62, and we've got the 14,901. The market's going to do its damnedest to try and get back above 15,000 today, if it can. Certainly a lot of selling around here yesterday as well. In the 30-minute chart, again, let's just have a look at this move. It was a huge move to the downside yesterday. And let's just do a quick calculation and have a look. So from its high to low yesterday, the market down 592, nearly 600 points for the DAX. That's a massive move. Then you can see we stabilized in the afternoon, overnight the same. We've just had a bit of a shakeout here, but we're trying to get back above the close at the moment. And in the 5-minute chart yesterday, you'll see the sell-off there. I managed to catch this, and then the market moved just sideways all the way through. When I say sideways, there were some fantastic trades through here, because you can see it's moving up 200, 100 points at a time. This is not sideways in the conventional sense of moving just 20 to 30 points, but big moves. Even here is a 150 point move to the upside, and then 100 points back, 100 points up, so some really good moves. Overnight, the market's having this shakeout and struggling a bit at the close at the moment as well. So treading water and trying to find some sort of direction. 7 a.m. will help with this when the futures market opens in a few minutes' time. So Monday's trades, 945 profit, really good day. 13.66 profit factor, and 76.24 win-loss ratio. Really good. The moves were just brilliant. So I can keep this every day for me with these 100-point swings, and more than that in the first sell-off that we had. Let's move on and have a look at the S&P. In the S&P, this also down, trading down to 89. A lot of support for this market here to the left, which you can see. So even if we break the 89, there's a lot of support there. Plus, we're also quite a distance away from this at the moment. So 78 holding at the moment at 3858, way below that magical 4,000 for the S&P. There's your down move. Then the open of the main session from 130 for the next 2 weeks. Get your retracement, and then the market stuck in a sideways move there. Moving on to the FTSE 100, big move to the downside for this market as well. Trading through the 78, 89, 7479, and then you've got the 200 MA there on the downside as well. 30-minute charts. Again, let's just have a look, see how big the down move was in this for yesterday. We'll just kick off from there, find the lowest point looks about there, down 217, massive move to the downside for the FTSE there. It's been in need of this shakeout in the daily chart for some time. It's seriously overvalued, and not a joke being up in the 8,000 area. So now actually making its way back. Watch the 200 MA if the 89 is broken in this market as well. So there's the 30-minute, finding support at the low of yesterday, an important area, waiting for the claimant count as well. Implied volatility, I keep forgetting this. I update it in the morning and then forget to show it to you. So over the last few days, we've seen the market moving up from 15.42 to 20.45. We had 18.71 on Friday as the news of SVB started to come into the market or into the make the headlines. So yeah, we're going to go to around 30% this area to show us any sort of a stop in the market on the downside at the moment. So that correction now well and truly in progress there. And if we look at a bigger time frame, you can see there how it's spiked up there. And before, of course, we talked about these areas of support, and over the last few years how the 14 and 15 had become an area to trigger a potential correction, and obviously the SVB news has assisted in that. In the currencies, GBPJPY, volatility galore yesterday, the market down, then back up and overnight above the 50 EMA in the daily chart. Here's your down move in the 30-minute charts, a good 150, 200 points. 250 points, that is. Then more or less all the way back. And then overnight, price is finding a bit of support and a sideways move. Needs to take out yesterday's high in order to move, to continue any sort of upside momentum. In the pound, also up again yesterday, trading between 78 and 89 from here, projected back. So a bit of resistance there with some supply coming into the market as well. The dollar's up on the overnight, which we'll look at in just a moment, putting a bit of downside pressure in the pound. But you can see yesterday morning, and then of course we had the sale of SVB. HSBC bought it for £1 and took on the 6.7 billion of depositors' money as well to secure that, and I'm sure that's going to be underwritten by the Bank of England. There's no way the bank would have taken that. So the token gesture of say, well, we'll take it for £1, but you're going to have to underwrite it, because there's no way that they would take that on. And in the US dollar, down yesterday but up on the overnight, there you can see one of the highest volume bars we've had for a while, but a bit of a bounce going on there. Just have a look at the 30-minute charts in this market. So yesterday you can see the market down and then moving back up a bit there overnight and trading sideways at the moment. And finally in the metals, big move for silver yesterday, massive move on the upside. This is a rare event, but obviously a flight to quality at the moment with the uncertainty in the banking system. And as the headline says, the small banks still not over and done with on the downside. So still more potential for the upside for both gold and silver. So have a look at gold. Oh, actually, let's look at the 30-minute chart. There you can see just blasting through the high of Friday and continuing to power ahead above the close at the moment. And obviously a lot to get through at the 22 level. Market trading close to it yesterday, but not quite holding through this. So it needs to drive through there. Gold also moving up as well. Big move there yesterday. Sideways overnight. And you can see the move as well, also powering through the high of Friday and needs to get through the high here as well. And finally, let's have a quick look at the gold-silver ratio, which has a surprise for us for yesterday. So gold-silver ratio absolutely tanking yesterday. One of the biggest down moves since this move over here, which goes back to October. Big move to the downside. Which means that silver put on more percentage-wise yesterday than gold. No surprise there, it's dirt cheap and way, way, way undervalued. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.